Hi, my dear friends. Welcome to Finance Talks. Today, we are going to talk about inheritance and succession planning. It is basically part of estate planning. Many believe that estate planning is just writing a will or partition deed. It's not, my dear friends. Estate planning has got 7 different aspects. Number 1 is legal. So, what kind of asset transfer you are doing it? Is will or HUF or what kind of family trust you are living in. Then it comes to taxation, how the transfer of assets affect the taxation part. Number 3, only inheritance and succession planning. Number 4, retirement planning. Many people confuse retirement planning with estate planning. Then number 4, you've got income generation for generation to come, how to create passive income. Number 6, we have got asset transfer, how to transfer asset to the family. And number 7, it's about charity. So any high net worth individual or per se any individual would like to make part of their estate planning as part of a charity also. So how to make charity? It cannot be one time, it can be for generation from passive incomes from charity. You can see many trusts are running charity. So it is all part of estate planning. Today, we will limit our topic only to inheritance and succession planning. Let us go to the video now. Before going to that, please subscribe, comment and share. Hi my dear friends, welcome to Invest Talks once again. Inheritance and succession planning. Before going to that, you are seeing some logo, Unison Insurance Marketing Private Limited. It's basically a IMF. It is Unison IMF floated by us. It is a transparent, unbiased advisory services in life, health and general insurance. Apart from that, we also do loan consultancy. That is, we are also facilitating all types of loans with an aggregator, which in turn provide hundreds of companies are providing through them. So we are an end-to-end financial services market. We are also advising in mutual funds and equity market in future. So you can contact us. And coming back to this topic, inheritance and succession planning guide. It is a well thought out one. It is for the people, those who have accumulated some assets and they don't want to fragment it for the future. My dear friends, architecture of wealth transfer. Basically, every person, decades of accumulation, he puts heart and soul to create residential property, real estate, businesses, investments and retirement funds. So what will happen during the transition? Something happens to him. What something means was, if he dies, unfortunately, what will happen? The transition breaks and his wealth gets fragmented. So instead of that, one should have a structured framework, easy transition, smooth transition without any familial conflict. The assets have to pass on. This is not just a duty, my dear friends. It is also a responsibility of each and every individuals, because with the hard-earned assets, he is giving to the next generation. Just because next generation, if he is not planning properly, then he is not performing his duty responsibly. So we will see it in detail. So what will happen if there is an inaction? Inaction means what? If he is not taking into account of how to transfer his wealth or assets to the next generation, means there will be, end result will be fragmentation of wealth. Number 1. And because of why? Because legal disputes between heirs will happen. Frozen bank account. The moment legal dispute is there, bank account will get frozen. Then delayed property transfer, tax inefficiencies. What is that? I'll tell you later. Then eventually fragmentation of wealth, even if it is distributed. So 3 keys to transition are: who will inherit it, and he can determine when they will receive it and under what conditions. So these are all the basic transition keys one has to know. The plan only unlocks smoothly when all 3 dials are aligned. So when these 3 things are aligned, it will get broken. It is imagine it is a vault. So if the dials are not properly aligned, what will happen? Either you have to break it. So you have to properly align these 3 things to get your next generation wealth properly transitioned. Okay. 4 foundation of valid plan. One is that clarity. Everybody in the family member without any doubt unambiguously must understand the wishes of the asset owner, leaving no room for interpretation. Second is that validity. Whatever the wishes, wills, or trust that person making, that should be legally valid. It should stand the scrutiny of the succession laws. Then tax inefficiency. Mitigate the capital gain triggers, because at any given point of time, if it is a capital gain, taxman will come and knocking your door. Then family harmony. So by doing all this, that you are keeping the family together. Preemptive family framework eliminates the ambiguity and prevents the familial conflict. So keeping the family harmony for generations also responsibility. You might be seeing lot of families, cousins are not seeing each other because their parents have not done inheritance and succession properly. So because of this, my dear friends, central idea is that generational wealth continuity and wealth accumulation without getting into fragmentation unnecessarily. Common structural oversights are interstate default. If a person, suppose I die without writing a will, it is known as interstate default. Then what will happen? My personal wishes will be ignored, but only the succession law will determine who will get how much. Nomination illusion. Many people think that nomination is will take care of. Okay, I have nominated in insurance, I have nominated bank account, I have nominated mutual fund, I have nominated what they call as equity markets. My dear friends, all these things, nominee is an illusion, my dear friend. Nominee is only a caretaker. So real owners are legal heirs, rightful legal heirs. Then information fragmentation. So failing to maintain a single consolidated record assets. Many people do not know how much assets are there. They don't keep a record. Then tax blind spots. So they do not know tax implication. Then old age fallacy. So delaying the process. When I become 70-year-old, then only I will write a will. Oh, hello, my dear friends. The moment you accumulate the significant assets, you have to write a will. That is always advisable, my dear friends. So one is that on one end wealth is there. Second is that heirs are there. Between this, all these structural oversights are there. And then number one tool, there are different tools, 3 different tools we will discuss. Hindu Undivided Family. It is a fantastic umbrella provided by with the legal backing, because it is separate legal entity and tax entity, independent PAN it has got. All the family members, lineal descendant family members are there. Then one side assets are there. The senior most family member becomes the karta, that is the executioner, that is who is the person taking care of it. Then strategic advantages, efficient tax for ancestral properties, complex tax separation, complete tax separation. It means that legal entity between the individual and HUF is different. Structural continuity across generation is there. Limitations are there. He must be deployed with extreme care when transferring the self-acquired property. So whom should I give? So say HUF is there, brother, sister, cousins, everybody has got. So taking your individual property into HUF, it is not reversible. It will be very, very difficult. So complex also. You have to, all the person have to agree, then professional advisory, lot of legal things will have to take place. So before moving your personal assets, take care of it. In family structure, my dear friends, in 3 entities are there. One is that settler, that is the origin, who transfers, the individual creating a trust and transferring asset to that structure. Then trustees, the management layer, professional trusted individual responsible for governance and asset protection, who is managing the trust. Then beneficiaries, so outcome, how much they will be receiving the benefits. So this is the 3 structure, that is a family structure has got 3 people, settler, trustees and beneficiaries. Ideal use case for trustees is that who has got a significant real estate holdings. Significant means large real estate holdings, commercial business, complex heir structure across multiple generations. The objective is that long-term wealth preservation that surveys the original wealth creator rather than one-time lump sum. One-time lump sum means what? Okay, isko 10 crore de do. You give it a legal heir 10 crore rupees. 10 crore rupees next generation, swaha. So he will expend all the money. Because you are the one created, you do not know the value of it. He will destroy all the wealth. So prevent that. This family trust structure is very good one. Then conditional wills and nominee myth. My dear friends, nominee is a myth. So nominee is basically administrative pass through. It is like a toll gate. He keeps that. Okay. So the moment, supposing one elderly person, imagine one elderly person has got, he has got two children. So both of them away from him for a long time. One of the niece or nephew are taking care of him with passionately, and then he is so much indebted to them, he want to transfer some asset. So he gives part of his assets, financial assets or any other assets, nominates that niece or nephew that money to him or her. So what will happen after his death? This legal here, that is the children jump in. Actual owners dictated by will or succession law. So they say that a nominee is not an absolute owner. So we are also legal here, give them the money. So this nominee is basically administrative transfer happens. Control after death is very, very low. So limited post-death control is there. This is the matrix you can see. And conditional will has got legal distribution. It is fairly higher than nominee. Can include conditions like age limits, supervision, etc. Then family trust, long-term management. If you want like a generations, like Tata Trust, it will keep on going for 150 years, 200 years. You can have this long-term management family trust. Continuous generational protection. So integrating financial, what we do in Unithan is that we are integrating financial and legal planning into an estate liquidity can create as an insurance. So on one hand, a legal blueprint here, we have got property law, HUF law, trust, wills, everything is there. Okay. Then here transition liabilities. From birth to death, it is always expenses, my dear friends. Birth of a child, school education, college education, higher education abroad, then wedding, then death. Everywhere there is an expenses there. Why not to create as an income generation event? So insurance makes you income generation events. Not only that, for your school education of your children, birth of the children, you can create a insurance for that. Then school education, you can create an insurance for it. Then you can have for higher education also, you can take an insurance, because insurance also gives a tax-free cash liquidity at given time. Fairly, it is also a certain one. Then you have got also medical expenses, then taxes, all these things. Even death also, it is a sad event, but still, if somebody has got an insurance, that family gets a compensation in the way of insurance. So it is a very good integral part. Insurance is an integral part of estate planning, my dear friends. If anyone wish to create these events as an income generation events rather than only expenses events, you can contact us. Then architecting the future, practical steps, my dear friends. It will be a very useful one. Please go through it. First one is that for having through this long, you prepare a comprehensive list of assets. How to segregate it, I will tell in the next slide. Then ensure institutional nomination match actual intent. Okay, so put nomination properly. First create a list, make nominations, then draft a legally valid will for personal assets, not for your ancestral asset. You have got no control. Then execute a legally valid will for your personal assets. Then evaluate, consult professional on HUF or trust structures. So if you don't have professionals, we can guide who are all the good professionals in the market. We can say that. So we don't take any money for that. We are just doing as a pro bono. We will tell them. Then communicate. Inform the family member. Many people don't say. Always inform that where is that red diary is. So red diary in which you have written all your comprehensive list of assets and the nomination about the will, whether you want to create a HUF or trust. You can write that also. If you have created the document also, you can write. So communicate to the family members. Otherwise, they will be running around here and there like a headless chicken. Then periodically update the plan. It is not a one-time one. Periodically, every 5 years, every year, when you accumulate a bigger asset, then also you can create. So by doing so, you have got a preserved legacy for lifetime basis. My take is that wealth built over decades deserves a thoughtful planning. Through careful structuring, wealth becomes a foundation of opportunity rather than a source of conflict. Yes, my dear friends, the wealth is becoming, inherited wealth becoming a source of conflict, but it should be an opportunity, my dear friends. So that's why you should trust Unithan. Here, you have got a summary of it. So why succession planning, common planning mistakes, then checklist. For being here, I'll say once again, make a checklist. What are your financial asset? What are your insurance asset? What are your physical, business? digital cryptocurrency without saying disclosing your family member. Many people have bought cryptocurrencies, not only Bitcoin or Ethereum or any other renowned coin, but they have bought some crypto coin because their friend has started a distribution chain. So every weekend he will conduct classes and they will sell that by this crypto coin. My dear friends, be careful about that. We will talk about that later. Then 3 core tools. One is that conditional will, family trust, HUF. Real life cases. Suppose a person has got 10 lakhs. He can split. He can make a will. A will gave spouse. So suppose on Raghavan. So he wants to give 10 crore for his property. That is 4 crore home. To spouse, lifetime residence rights, final ownership split equally between his son and daughter. Protecting commercial property income. He has got a commercial property income, 2 crore, move to a family trust or equal rental income or equal income and distribution of protection. Distribution of income and protection. Then conditional grandchildren fund. He also want to give something to grandchildren. Mutual funds earmarked for grandchildren accessible at the age of 25 for education and entrepreneurship. So that's it, my dear friends. I think this is useful for you. And if you really like that, please comment and subscribe. If you want anything in this, we can also have one-to-one webinar. If you are a serious, significant assets with you, we can have a webinar with you. So you can ping me. I'll also give you my email ID below. You can contact. You can also join my Finance Talk channel. Please stay tuned in this channel. Please subscribe, comment and share. I think this video has given a glimpse of what is inheritance and succession planning. If you want, we can also have a podcast with the specialist persons in future. Thank you for staying tuned. Please subscribe, comment and share. Thank you. Bye-bye.